Hello, good afternoon, everybody. I hope you're having a nice time wherever you are. So maybe it's afternoon, it's evening, it's still okay. So today's 16th of December. Today's webinar, I want to look at something which is really useful, and I want to say that this is one of my best strategies. This is one of the best things, the best tools which I use when I'm trading the intraday. So from the topic, you saw that we wrote the correct combination of moving averages for intraday trading. So technically, what you want to look at today is we want to look at what are the best combination of moving averages, the same moving averages which you can be using for trading. So I want to explain something. I want to explain what indicators are first of all, at least so that we understand where I'm coming from, and then after that I'm going to look at the indicators themselves, so that I now bring the combination for the two, for the indicators. Okay, so there are two sets of indicators. There are those indicators which comes by default on MQL4. There are those which anytime you install MT4, they come by default. And then there are those set of indicators which you have to create them on your own. So let me show you an example. Just a second. Just a second. So I'm preparing it on my screen so that you're able to see whatever I'm saying. Okay, so whenever assume you're on this screen and you go to this this red plus sign here, green plus sign. If you click it, it takes you to a list of indicators. So the list, the first ones you're seeing, this and this, they're not listed in an alphabetical manner as such, but these are list of indicators which you just used recently. The first group of indicators are the list of indicators which you just used recently, and then there's another set of indicators which these are those ones which comes by default. So they include average directional movement index, Bollinger Bands, envelopes, this one, moving averages, parabolic, and then there's the standard deviation. We also have the oscillators. Oscillators are basically those indicators which shows you overbought and oversold areas. So if you attach this on the screen, if you touch, maybe you attach stochastic. This is my favorite. This zone here stands for oversold, overbought. This one here stands for oversold. This stands for overbought, oversold. And then there's another one, this stands for overbought. So the idea behind oscillator is to buy when the price is overbought, oversold, and then to sell when the price is overbought. So some would be wondering, how comes I'm saying you're supposed to sell it, the price continued up? Okay, sometimes the concept does work, sometimes it does not work. The idea of buying when the price is overbought, buying when the price is oversold, and selling when the price is overbought, sometimes it does work, but not all the time does it work. Like in this case, it didn't work. The price basically continued to the upper side. So it was overbought, yes, overbought, but the price still upwards. It slid below 80, but the price still upward, before it continued even. So even in this case, the price was somehow oversold, but it continued up just slightly before it went down. You can see the same thing happened. It continued down slightly before it's now downwards. Okay, that's an example of an oscillator. The other set of indicators are the volume indicators. So this one basically shows you the volume in the market. Then there is the Bill Williams, and then we have the custom indicators. This is what the real thing is. This is where like you may have an idea which you'd like to turn into a program, but you have to code it. All those programs which you've coded on your own, those indicators which you've bought online, you've coded them on your own, you can basically find them in this list. So if somebody may be wondering how can you create your own indicators, yes, it's possible. There is this little button here which stands for Meta Quotes Language Editor. So what it does is it basically gives you the room to be able to create your own programs. That's the reason why. That is the reason why it's here. So don't be wondering how can you create your own indicators. You have this button here which you can use to create your own indicators. Of course, you have to learn a programming language known as the MQL4 or MQL5. So that's not broker specific. You can learn it and then create your own indicators, create your own experts, so that you can be able to use them. Now, back to what we're supposed to be looking at today. We said we want to look at the moving averages, the correct combination of moving averages. So personally, I do use like a set of 6 indicators. I mean set of 6 moving averages. Okay, you may be wondering what that means. Let me start slowly. So the first combination is this. You go here, sorry. We are here, indicators. So another way, if you can't, sometimes this list may be deceiving. That is, you may see an indicator here, stochastic, as this, but whenever you attach it, it brings something else on the screen. Okay, to avoid that, just go to Insert, then go to Indicators, and then you can now select the set of indicators, the ones which you want to attach to your screen. It's that simple. Indicators, I mean insert insert indicators, select your indicator and then click it. It will be attached on your screen. So as I was saying, personally I use 2 sets of indicators. I mean 6 sets of moving averages. So the first 2 which I use mostly, they're this: insert trend indicator, and then the first one is this. This is 30, and then the next one 200. Okay, you may be wondering how comes I'm using those 2 moving averages. I mean the period. How comes I'm using the period of 30 and 200 instead of any other number? Because the period, let me explain something first of all. Okay. The word moving average, like in this case we've said the period is 200. MA method is the method with which you want to calculate the average, and then the prices which you are finding the average for. Okay, the word 200 means to find the average for the past 200 candles. So that would mean that whenever we want to calculate average, we find the closing prices for the past 200 candles, and then we use the simplest method to find the average for those closing prices. So that is what is now plotted as the moving average for candle 0. The past 200, that becomes the moving average for candle 0. If the next candle opens, we find the moving average for the past 200 candles, and then that becomes the value for that candle. So how I came up with these numbers, how we come up with this 200, how we come up with this 200 and this 30, you have to learn how to use the strategy tester. You have to learn how to use the strategy tester. So in my experience, I've noticed that most people don't understand that actually MQL4 has made very many things much simpler. A lot of things have been explained. many things. There's information which people need to use to at least help them make more money, but most traders rarely even access them. It's not that they're not there, everything is there on the screen. Okay, I want to give you a good example. If you go to help, then you go to help topics. Okay, look at what comes up on my screen. Okay, this window is not something very far away from everyone. Everyone can see it as long as you have an MT4 account, MT4 itself, platform. Then I expand. It was like this, then I expand it. So you go slowly to this part, analytics, and then you go to technical indicators. So here on the technical indicators, there's this option where there's moving averages. So when you click it, you'll basically find an explanation, like a documentation of what moving average is. You'll find what the moving average actually is. So the moving average indicator shows the mean instrument price value for a certain period. So the period here is 200 candles back. I hope you understood whatever I said here. The period which they're referring to is actually 200 candles back. So when they say the moving average technical indicator shows the mean instrument price for a certain period of time. So basically we are finding the mean price. That's the closing price for the past 200 candles using this method, the simplest moving average method, this one. So this is how it's calculated. This is the formula. So if you are wondering how this indicator was created, you just want to read this. You may want to try to read this. Just take your time, go through all these explanations, and you'll come up knowing much more than most people know in the market. Does this make sense? So these are some of the things people need to understand. Most traders need to understand that everything has been explained. Everything in MT4 has been explained inside the help option. This one. There's a lot of explanation. This explanation line studies. Everything, whatever it stands for. All indicators. If you want to know about an indicator, you just need to press this button here. F1, not F1 exactly. Help. Then you go to F1. You go to help topics. Okay. So this one, with these two indicators, how I trade them is this. How I use them for intraday trading. First of all, I don't use it on 1 hour. You have to go down to 15 minutes or even 1 minute at some time. Sorry. Yes. So whenever the first moving average, which is the 30 period moving average, crosses above the 200 period moving average, that's always a good time to look for a buy. So whenever this happens, I'll keep looking for a buy. Whenever price crosses, I'll look for a buy. Whenever price crosses, I'll look for a sell. Whenever there's a cross, I'll look for a sell. That's whenever the black line, which is the 30 period moving average, goes below the green line, I'll look for a sell. So there are some cases where it may fail to work. There are some cases where the same concept, the one which we used to buy and sell, buy and sell, buy and sell, it may fail to work. That does not mean that the whole thing does not work. No. If you just remain with a cross between the two moving averages, you will get that at least at some point you get good money. So the idea is, if you buy, assuming you bought a cross, you bought something like this, you bought this cross, here, you've bought it here. Your stop loss, the safest place to have your stop loss is below the previous day's lowest low. That's the safest place, where if you have your stop loss there, chances are high that the price may likely not get to it. So if yesterday's lowest low is above where the price is now, you can place it on that day's lowest low. Like in this case, when you sell here, assuming you sell this, you sell it here, your stop loss needs to be above that day's highest high, 78.782. So if you sell it there, have your stop loss there, and then at least take profit 2 times this amount. So if the stop loss was how much? If the stop loss was 33, just ensure that the same take profit is 33, somewhere around this point. So this cross is really good, but you need to learn how to work with the lot size. This webinar we did previously about lot size. We learned how somebody can come up with the correct lot size based on whatever they've lost or based on what they expect to be losing. Okay, this you can see all this. This is a good sell opportunity. Then this is a buy opportunity. There's a sell here. There's a sell here. There's a buy. There is a buy. There is a sell. There is a buy. There is a sell. There is a buy. There is a sell. There is a buy. Then we have a sell. We have a buy there. We have a sell. We have a buy. We have a sell. Then we have a buy here, and then we have a buy there. So there's one thing which I've not explained. There is one thing which I've not explained with the moving averages. I think it's something which is useful. People need to understand it. Okay, whenever you click the moving average, there is this shift here. So shift basically means start calculating moving average from which candle. This is what it means. Start calculating from which candle. So if you say from candle 1, it means from the immediate previous candle. If you say from candle -1, sorry, I meant if you say candle 1, you're basically saying calculate from the next candle. That is assume that there's a candle which has just started and calculate from that candle. So it's like we are going to the past, and whenever you place it, let's make it 10 so that it becomes visible. If you make this 10, you can see the moving averages shifts from the current candle to the 10th one. It's like it's forecasting 10 more candles. If you place your mouse here, then you start calculating how many candles could have been there if they were real candles. Yes, you can see that they are around how much? Around 10. So it's the same value which we have here as 10. If you place it 20, you can see what that means. It shifts again, and the number of candles, if you start calculating how many candles which are supposed to be there in between this point and this point, you'll find that there are 20. So you can do that with the crosshair. Yes, it's 20. You can see that the first number in between 20, 18, 78. So the on the crosshair there's this number 20/18/78.413. The first one is the number of candles. The next one is the number of pips from the point of anchor, that is 78.375, and then the last one is the price where the anchor is at now. So the anchor is actually the plus sign. Okay, I hope that makes some sense. Up to that point, I hope you're clear. So I'll turn it back to 0. Okay, so when you put it to 0, you can see that now it goes back to normal. It now becomes what we expect it to be. Okay, so that is how we come up. That's what this indicator basically stands for. So this is the first combination of indicators which I use. The next combination, I use 21 and 52. So 21 and 52. Okay, so the other question somebody should be asking me is, how did I come up with this period? How did I come up with this period such that I'm using 52 and the other one is 21? So get it from me, I didn't read that from anywhere. This is purely from experience and from testing through the strategy tester. So we have the strategy tester here already. It's here, you can see it. We have the strategy tester here. So this is what I used to get the correct period for my moving average. So I basically created an expert which was testing. It was testing a cross between these two moving averages. So whenever there's a cross, we enter trade. 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 So I now took the periods and then placed them as a parameter for that for that expert. Then I optimized the value. So this is the optimization button. I optimized the values. After that, I now got the correct moving average periods. So that is simply how we came up with those values. If you just read them online, it's still good, it's still okay. You may find people have done the same thing and then they've made it now at least available for everyone. But personally, I had to go through the procedure of testing it on my own. So this is another cross which looks really useful. If you remain with the cross between this, it's really useful. Okay, that's another combination. The next combination which is useful is actually 200 and 52. This is another combination which you may want to look at. This is good for a high time frame, although it's good for higher time frame if you're doing 4 hours or if you're doing daily or 1 hour. You may want to check this out. So this is another combination which looks really useful. If you just remain with a cross between these two, so your stop loss, this is where the challenge is. The stop loss needs to be a bit far than the others. You have to have your stop loss at least a bit far compared to the other other set of indicators, to other sets of moving averages. So that will ensure that the stop loss, you are in a trade for a very long time, and then it also protects you from being closed prematurely. And that would mean one thing: you need to have enough capital in your account to be able to let that trade run. Does that make sense? Okay, so that should bring us to the end of today's session. I'm really grateful for you guys tuning in. So thank you very much. I will meet again next week at the same. So thank you. See you.